Good morning, it's Harvey Jackson. Just going to go through the post USDA and the significant news that's happening in the market here as well. I just found this on the news wires. La Nina is becoming less likely in Australia, and I think that might have a play into the negative, likely for our crops here as well as far as size. If they end up with any size of crop, that would be significant to our detriment. So USDA, what's of note here is your slightly decrease of what was expected and what happened last month. So, but an increase in corn, and yet you would see the carryout actually change here as well. So corn is below your 2 million bushels, but you see a significant increase in soybeans and almost flat to a slight decrease in wheat, which actually could help this market a little bit. So corn and soybeans worldwide is this is probably the most burdensome. But what I'm going to be paying attention to is wheat for the Western Canadian farmers here, and that is still an increase over last month. But we'll see if some of the decreasing yields in some of those exporters are going to have some play in there. I think Russia and Europe having smaller crops could have a play in this number going forward here. So if you look at the South America crop on soybeans, this is our hurdle that we need to probably get over. And this, as planting progresses, we're going to have to see if this can be an attainable number. Even in their record crop year 2 years ago, they still trimmed yield as the crop was growing. So we'll see how that plays out. Karen Braun actually has been putting these things forward here as well, as far as uh, net long and net long of all of the majors that are in the U.S. Um, Brazil is 8.2% planted as from ag rural. Still a slower planting pace on the whole. They generally wait for moisture before they start planting, and we'll see in the weather maps here as well. Crude oil has actually decreased significantly in the last couple of trading sessions. We're down 5% on Israel making promises that they're not going to hit strategic oil infrastructure of Iran's on their retaliation. Just a few slides on weather. You can see here precipitation is void. It's getting added into this area and still void in this area as well. So, and still adding over here as well. So you've got where the harvest is here. This is important for harvest. This is important for planting the winter cereals. And I guess that would be the same here as well. But then waiting for moisture in this area here, it looks like in the next 10 days, you're going to get it. Here's just where moisture's been flowing through. But if you look at the next week, you actually have a lot of that corn, soybean growing area without moisture for the next week. So I would expect, the 47% of soybeans harvested and 20 something or 30 of corn, we're going to be moving those up significantly in the next week if these areas stay void of moisture and harvest can really get rampant. Uh, Lots of moisture in some of these areas, and it looks like it's going to be building for those South American farmers to continue to plant. Oil seeds. What I want to point out here is this might be one of the last few days. I'm going to use November as a front month because you can see the volume and open interest are. Our volume is okay, but the open interest on November is starting to wane, and January is actually the lead month. But if we look at what's actually happening on the markets here, oil seeds are all down, and wheats are down a few pennies, and the Canadian dollar continues to trade down. So here we are with canola. We broke through our 50% on the wave, approaching the 38.2 retracement value right in this area here. So we need that to kind of hold, and we'll see if that's going to happen here. You can see that Chinese rapeseed is still on an increase in price, with palm oil, with a leg down, and we've got all the other oils with a leg down. So but you can see that canola and your soybean oil over the last 6 months has actually lost some ground, where your Chinese rapeseed and the palm oil have gained, 10 to 13.5%. European rapeseed still just trying to hover right around the trend line and right at the 63 retracement value. So still holding on. We'll see if it can continue, because I would give the canola some support. Trading about $132 more expensive than a Canadian canola. And here's your soybean oil. Broke through the first level of 38.2 on the downward move, through the 50% retracement on the wave analysis. That was important. So we need this to probably get some support here somewhere. Palm oil still trending up along with the rapeseed, so that's a good thing. But you can see this is a tale of what's kind of happening with all the oil seeds. The crude oil is backed right off, and the Canadian dollar is actually going in that same direction. We're approaching the 23.6 retracement value. See if we can bounce off of that. I'm okay if it gets into that range, of course. Wheat, choppy. Last three trading sessions, still trading red, even though there's been some Russia talk of putting some sanctions on their wheat. Whether that's going to happen or not, that's the next guess. But here's Chicago wheat approaching the 23.6, and it looks like the hard red winter has breached the 23.6 and the short-term moving average. Milling wheat still getting supported by your 20-day moving average, but above the 23.6. Corn, on the other hand, has broken through the channel and broken through the 23.6 retracement value. So the next level of support is right around this 401, which is your low that we made just in mid-September. Next actual important support date is the crop production report there, and I think there's actually another date just a few days before that would be the U.S. election, and see how that actually plays out as well. That's all I have for you today.